Welcome to The Explainer. Today, we're exploring a seriously fascinating concept that kind of completely flips the traditional script on business ownership. We're looking at a method that lets you bypass that notoriously risky, grueling early-stage startup phase. You know the one. And instead, you jump straight into the CEO seat of a company that's already profitable. It's a real game changer, and it's totally reshaping how we think about wealth creation and leadership.
I mean, we're constantly fed these stories about the massive startup grind, right? The late nights in a freezing garage, the desperate search for product-market fit, and that terrifying reality that, well, the vast majority of new ventures just flat-out fail. But what if you actually didn't have to start from scratch? What if there was this lucrative kind of hidden path where you could just buy an existing, successful company and immediately start growing it?
Section 1. The Hidden Entrepreneurship Path. Okay, let's dive into this and figure out exactly why buying a business might actually, outshine founding one from the ground up.
So, the massive risk of traditional startups is glaringly obvious. You're dealing with crazy high uncertainty, totally unproven revenue, and you are literally starting from absolute zero. But contrast that with acquiring an existing business. You step into a scenario where there's already an established customer base, proven revenue streams flowing in, and operational systems that are just humming along. You get immediate stability and drastically lower uncertainty right out of the gate.
And the financial and career upside, it is incredible. Data from the Kellogg School of Management compares typical post-MBA career tracks, and ETA stands out in a big way. With this acquisition model, you aren't just a direct report to the CEO. You are the CEO from day one. You've got immediate C-suite authority. And while a standard corporate path might offer literally zero equity, this path offers an equity upside that can reach anywhere from $0 to over $10 million. And that's alongside a really healthy base salary too.
Section 2. Demystifying the ETA model. So now that we're seeing the undeniable value in all that upside, let's break down exactly what this model actually is and how it functions.
The official industry term for this whole concept is Entrepreneurship Through Acquisition, or ETA. Put simply, ETA is a business model where an individual, who's usually called a searcher, acquires an existing small or medium-sized company instead of starting a brand new one. Your core strategy here is searching for, buying, managing, and ultimately growing a business that already works.
Now, there really is no single best path to actually pull this off. It totally depends on your own personal goals and your risk tolerance. You could use a traditional search fund where you raise an initial pool of capital from investors just to fund your search. Or you might go with a self-funded search using personal savings and loans if you want more control. You could act as an independent sponsor, raising capital on a deal-by-deal basis. Or you could even use a holding company model, where you acquire multiple businesses over time to build economies of scale.
Section 3, the small business succession crisis. So why is this opportunity so incredibly massive right at this very moment? Well, it all comes down to a historic macroeconomic backdrop. We are currently right in the middle of a massive demographic shift, and it's driving a huge small business succession crisis.
The crucial point here comes down to one staggering figure: 76%. Yep, 76% of Canadian small business owners are planning to exit their businesses within the next decade. I mean, just think about the sheer volume of companies that are going to need new leadership very, very soon.
And that 76% exit wave, it represents over $2 trillion, yeah, that's trillion with a T, in business assets that will be changing hands. This isn't just a passing market trend, this is a generational wealth transfer opportunity unlike anything we've ever seen before.
To put that in perspective, it's estimated that there are currently 54,000 Canadian businesses up for sale right now. And this is a really critical issue for the economy. Because if these businesses aren't acquired by new, capable entrepreneurs, they risk shutting down completely. And that means destroying jobs and really damaging local communities.
Section 4. How search funds actually work. Keeping that immense opportunity in mind, let's shift gears a bit and get into the actual mechanics. What does the timeline of a traditional search fund vehicle actually look like?
The whole process generally follows 4 distinct stages. First up, you spend about 2 to 6 months raising the initial capital from investors, and that's literally just to fund your search. Second, you spend 12 to 24 months actually hunting down and acquiring the absolute right company. Third is the main event, 4 to 7+ years of actually operating the business, creating value, and driving growth as the CEO.
And finally, a 6-month period to exit, where you and your investors realize those financial returns.
Section 5, the secrets to ETA success. Okay, this brings us to a really important question. Why does this specific model work so incredibly well compared to, say, other asset classes or traditional venture capital?
Well, the answer lies in the returns. Traditional search funds have produced an absolutely staggering 35% internal rate of return over the past 40 years. That kind of consistent, high-level performance over 4 decades is practically unheard of. So, what exactly is the secret?
Now, what's really interesting here is exactly who is running these companies. Searchers typically come from highly disciplined, high-performance backgrounds. We're talking top MBA programs, private equity, the military, management consulting. One of the biggest secrets to ETA's success is that these searchers are just exceptionally talented, they're highly coachable, and they're incredibly incentivized to perform. Why? Because they literally earned equity ownership as they hit ambitious targets.
Another massive part of the secret sauce is the incredibly strict criteria they use to target businesses. Investors and searchers are actively looking to minimize execution risk for a first-time CEO. So they want businesses with high recurring revenue, a long history of profitability, greater than $1.5 million of EBITDA, low customer concentration, and high barriers to entry. They absolutely aren't buying turnarounds here. They are buying robust, resilient, well-oiled engines.
And get this, ETA isn't limited to just one trendy tech sector. Acquired companies span totally diverse, fragmented industries, heavily favoring services, software, and healthcare. This means you can pursue your own specific passions in non-cyclical, fundamentally stable industries. Industries that really just need a fresh layer of modern management to scale up.
Section 6. A pathway for everyone. Let's zoom out for a second and look at the broader societal impact of this model. Because ETA isn't just a clever financial tool, it's a model that is actually opening doors for entirely new, diverse groups of future leaders. As Venture for Canada points out, ETA presents a golden opportunity for underrepresented groups. Because it completely bypasses traditional startup barriers, where access to venture capital is often heavily skewed, it offers a much more equitable, accessible route straight to the C-suite. For women, immigrants, and racial minorities, acquiring a functioning business allows them to immediately focus on innovating and growing. That accelerates wealth creation and actively helps reduce economic inequality. It's a huge step forward. But I should mention, the geography of where you actually do this matters a lot, because there are structural hurdles. For example, in the United States, financing and acquisition is greatly aided by the Small Business Administration, which provides loan guarantees that drastically reduce risk for lenders. But in Canada, the lack of an SBA equivalent forces entrepreneurs to rely way more heavily on personal savings, high-interest loans, or creative solutions like seller financing and search funds. This makes specialized training and alternative financing models absolutely critical for success north of the border.
Now, we definitely need to dispel a common misconception right here. ETA is not easy money, and it is for sure not a shortcut. Acquiring the business is literally just day one. It requires intense due diligence, navigating super complex purchase terms, and securing that financing. But the real challenge? It's stepping into an existing culture, solving deep operational issues, and actually driving post-acquisition growth. It takes immense strategic acumen and serious leadership chops.
Which brings us to our final thought. The businesses that form the absolute backbone of our communities are going to need a new generation of leadership, or else they risk closing their doors forever. Entrepreneurship through acquisition offers a profound path to economic renewal, job preservation, and, personal wealth creation. The opportunity is literally sitting right there. So the question is, will you seek out the training, like the ETA Academy mentioned in our sources?